Alright, boom. So real quick, this is just in my notes. I'm going to have it in a nicer document for you. But when you see the alerts coming out, they're going to follow this format. Okay, so don't pay attention to those plays necessarily. Those aren't technically our plays for this week. I was just some ideas I'm coming up with and working on. But down here, you're going to see how the plays are going to be alerted from now on. So you're going to get the ticker first. And then it says ER play, so just any special details about that ticker that you need will be right underneath it. It'll give you the risk level. So this is to help you make decisions based on your risk level. So if you can't handle a high risk trade, this probably isn't the trade for you. Also, if you can't handle a medium cost trade, this probably isn't the trade for you. If it's right in your range, if you're like high risk, that's my bread and butter. You know, right in the middle of the road for the cost, that's my bread and butter, then this is a good trade for you, okay? Your profit potential on this, I'm not selling for less than a 50% profit, and I'm expecting anywhere from 50 to 300% returns on this. Why am I pulling this trade? So with Disney, this is a perfect reopening and stay-at-home play with Disney Plus. This is one of my favorite stocks. It's been recommended by a lot of my favorite analysts. It has a strong history of crushing earnings, and I don't know how the expectations are going into this one, because the last one, people had lower expectations, but then since crushing last one with the Disney Plus subscribers and everything, it's going to depend a lot on those Disney Plus subscribers. I think with a lot of the releases they have, and people still being locked down in so many places, I'm pretty sure it's going to look great. So you're almost guaranteed with this earning play a hype run-up, so that's exciting. So you can expect that if there's a good expected earnings, the price is going to go up on the way up to earnings, no matter what. So you can always sell before earnings and make a profit as long as you don't get greedy. There's also been a lot of recent institutional buying, so that's always a good sign. Now, the big risk is that it could result in a sell the news earning event, so whether it's good or not, good or bad earnings could result in the stock coming down, because even good earnings can result in a sell the news if it runs up too much on the way up to it. But we've seen some like Netflix crushed earnings and they ran up after. So I was so mad. I played earnings on Netflix and pulled everything before the call, and I was like, I'm gonna leave one, and I didn't. So with Disney, I'm definitely going to, but like, I just put out a video on making your own strategy. Please make your own strategy. Don't do exactly what I do. We have different risk tolerance, different strategies, different budgets, different everything. This is for ideas for you guys. If it fits for you, use it, okay? So this stock has been recommended by everybody with a soul, including some of my favorites with like Motley Fool guys and some Jim Cramer's one of my favorites on CNBC. And I don't know anybody who's going to tell you not to buy Disney right now. I know some people who said to maybe wait until it's more around 150, 160. I don't see that happening, so I think you'll be waiting a long time, but you never know, it could. The chart setup, I'm going to give you the chart setup on Disney. This one is just bullish as all get up, all right? So currently, I'll let you know what I'm holding currently. I'm holding one $180 call that I alerted on Friday. Now, I plan to be holding at least 4 of these calls on the run-up to ER. I'll probably sell 2 to 3 of them before earnings to take profits on the run-up, and then I'll hold 1 to 2 of those calls through earnings for the big money potential. Now, you have to determine what moves you want to make there on your own based on your own risk. But some ways that you could limit the risk is you can buy call spreads instead of calls to lessen the blow of the high premiums, because anytime there's earnings that week, the premiums are super high. You could sell your own call, or you could sell the call in the spread, so you could create the spread by selling a call at the height of the hype prior to the earnings call while still holding on to your calls that you bought, so that way you don't have to lose out on the gains you already got from those. You can always sell those and just enter into a spread depending on what your broker lets you do too. Now, if you're planning to hold through earnings, you might want to spend a little bit more money per contract and buy a few less contracts with a further expiration, because what often happens with earnings is if they have a great earnings, you may get a sell the news event that day, the next day, for a couple days even. But then the analysts start coming in with buy ratings and recommendations, and then the stock goes right back up. New price targets based on good earnings and things like that, and then it'll skyrocket in the weeks following earnings. So if you want to limit your risk, you might limit your gains as well, but if you plan on holding through earnings, I would go a little farther out with the expiration. Then I'm going to give you the resistance points. So support levels are great for buying, and resistance levels are great for selling, there's a lot of factors that go into that I'm watching. So I don't want to give always situation there. But instead of asking me, should I buy, should I sell, ask yourself, is this at a support or resistance level? And what's the chart doing, right? So the 52-week high for this stock was 182.30. It did blow through that resistance. I think it was after hours, so I don't know if we should technically count that. But the current price is 183.69. The next resistance would probably, since this is an all-time high, 52-week high, it should be an all-time high. The next resistance would really be psychological at like 190, 195, and then of course 200 is a big psychological resistance, but the technical resistance is going to be 183, 93, 190, 53, and 207.91, and then the technical support levels are going to be 180.94, 177.95, 173.01. So if you maybe get alerted to the trade too late, or you see it too late, or you're debating it, and then you see it pull back to one of these levels and kind of hold at that level for a while, that might be the buy opportunity that you're looking for. If it's teetering at 190, and it's been trading sideways at 190 for a couple hours, couple days, however, it depends on your style, what you're trading. But if it's kind of trading sideways, according to your style, that might be the time to sell, right? You can always sell and buy back in if it breaks through the resistance too, and that way less risk and still keep most of the reward, right? All right, I hope this helps you guys out, and I hope you like this new format that I'm going to be giving you guys. I'm also going to drop in some high risk plays as I take them through, and some swings and stuff, but I want to give you at least one of these every day that's a real quality play with a lot of detail, and I hope that helps you out. Give you some input, let me know what you think. Thanks guys, peace.